Welcome to Asia Granny Bites, thematic stock plays in China and beyond, on the Piranha Profit YouTube channel. I'm Mr. Piranha, joined by Ms. Profit.
We're here to bring you actionable insights for retail investors, adapting fund strat, GR&Y themes to high-growth Asia markets. Every Wednesday at 2:01 p.m. UTC, 10:01 a.m. ET, 7:01 a.m. PT, 15 to 20 minutes, or 2025 for this premiere.
This is for entertainment only, not financial advice. Invest at your own risk. Past performance isn't a guarantee. Do your research and consult a professional. Full disclaimers, including no liability and subscription details, are in the description.
Let's dive into the markets. Trade smart, piranhas.
Welcome to Season Score Episode 2. I just got back from my, t-shirt vacation, and oh boy, the vibes are unreal today.
Yeah, absolutely. I mean, look at that glow, Mr. Piranha. Your aura is, simply radiant, and here you are rocking that handsome vacation look too.
Haha, thanks. And don't even get me started on your style. Sipping that coconut drink by the beach. It's like, you're literally carrying the vacation with you.
Right. Exactly. So, moving on, today's episode is all about riding festive retail waves, with seasonality at the core, plus Millennials and PMI Recovery as our secondary themes. The date, October 22nd, 2025, talk about scoring big.
Right. Last week's Style Tilt Surge was about momentum and undervaluation with a spotlight on Tencent and Samsung. But today, we're switching gears to focus on the festive season, and there's so much to unpack around the macro news.
Yeah, I'm with you on that. Oh, absolutely. Let's dig into the macro update. As of October 19th, 2025, festive season momentum is building, primarily driven by China's retail sales, rising by 3.4% year-over-year in August. And that surge is all fueled by pre-holiday e-commerce.
Right, but here's a key twist. The U.S. tariffs are really shaking things up. We're talking a whopping 100% tariff on Chinese imports set to kick in on November 1st, and specific tariffs like 10% on softwood timber and 25% on furniture starting October 14th.
Yeah, exactly. That's bound to dampen consumer spending by about 5%, with a GDP drag of around 0.15 to 0.20%. So while the festive buzz is high, these tariffs could put a chill on retail exuberance.
Absolutely. And if you look at Japan, its PMI is 48.5 in September 2025. And then there's India with a hot PMI of 57.7, South Korea at 50.7, Singapore holding steady at 50, and Taiwan down to 46.8. All these numbers really paint, a very diverse regional picture.
Yeah, right on. And then over in ASEAN, we're looking at growth projections of 4.1% for 2025 and 3.8% for 2026. Oh, and then you have the PBOC's stimulus moves, like the 1.4% reverse repo and RRR cuts boosting e-commerce, even though tariff pressures are making margins squeeze by 10 to 15%.
Yeah, so watch closely how festive spending trends evolve as the tariffs start biting. It's like, mixing fireworks with a sprinkle of caution, right?
Absolutely. Now, let's switch to our Piranha Pick segment. This one's all about capturing that festive cycle. Starting with China's Pinduoduo, which, is riding a major e-commerce holiday surge with a focus on millennials.
Exactly. Pinduoduo's closed at 131.25 on October 8th, with a YTD gain of 20% and a 7% jump in Q2. Its SWOT analysis really tells a story. Strengths include a low-price model and rural market growth, but weaknesses are margin pressures from bigger players like Alibaba and JD.
Yeah. And don't forget the opportunities with festive sales spikes combined with potential rural expansion. But there are two, threats like U.S. tariffs impacting spending by 5 to 8%, and also regulatory challenges.
Right, and we can't ignore its economic moat. Strong logistics and a data-driven platform make it quite robust. Now, shifting our focus to Asia ex-China, we have C Limited, or SE, riding the ASEAN retail boom while capturing gains from PMI recovery. closed at around $180.82 on October 3rd, with impressive gains of 40% YTD and 25% QOQ in Q2.
Yes, indeed. C Limited's SWOT is equally interesting. Strengths include its integrated ecosystem with Shopee, Garena, and C-Money, but it's also facing a high cash burn during expansion. Opportunities abound with festive demand in ASEAN and the ongoing digital growth, but threats like increased logistics costs from U.S. tariffs and tough competition from, Amazon are on the radar.
Exactly. The economic moat is moderate, driven by regional platform effects, but not as wide as Pinduoduo's, perhaps. I mean, could there be a bit more room for debate there?
Maybe, but it's still a solid play. True. Though sometimes I feel the analysis might, underplay the risks associated with aggressive cash burn in a competitive market. Yet the festive season provides a major tailwind. Wouldn't you agree?
Yeah, I see your point, but I'd say the festive demand really offsets those concerns, at least for now. It's like a calculated risk that could pay off big time, kind of like betting on a seasonal fireworks show where the sparks fly at just the right moment.
Yes, absolutely. Now, diving into the fundamentals and technical rating, for Pinduoduo, we're looking at fundamentals with a 7.43 out of 10 average overall score. Revenue's up 7%, margin sits at 15%, debt is low, ROE is 15%, and FCF is positive. Plus, the DCF found
indeed.
it over 20% undervalued.
Right. And on the technical side for Pinduoduo, price above the 20 and 40-day moving averages, an RSI hovering around 50, and strong support/resistance positioning gives it an average of 7.5 out of 10, culminating in a combined rating of roughly 7.47 out of 10. Solid bite indeed.
Yeah, that's a strong performance. Now C Limited ticks in with a fundamentals score averaging around 7.14 out of 10. Big revenue growth at 25%, a solid but slightly lower margin at 12%, and its FCF positive metric keeps it robust. And politically, with low risk, it edges over in the fundamentals game.
Plus, the technical analysis for C Limited is a bit shinier, with scores around 8.5 out of 10 on average. Price above important moving averages, RSI in the sweet spot at 55, and strong indicators from stochastic and fib levels. Look at that, bringing its total rating to about 7.82 out of 10.
Exactly. So, in the end, both picks come off as, solid bites for the festive season. But I'm curious, don't you think the heavy emphasis on tariffs could potentially unsettle Pinduoduo a bit more?
Well, that's a fair critique. I mean, Pinduoduo does face that tariff squeeze risk with potential cost increases, but its domestic focus might insulate it to some extent, keeping the impact to potentially under 10% position-wise.
Yes, I see that. And C Limited, with its ASEAN focus, arguably has a buffer, though rising electronics costs plus a 10 to 15% hike in logistics expenses might still be a pain point.
Right. It's all about balancing that modern trade-off between festive momentum and, external risks. And with PMI recovery playing a role, especially in Asia, it offers an interesting counterbalance to tariff-induced slowdowns.
Yeah, exactly. Let's talk a bit more about the overall picture. The festive cycle here is, both an opportunity and a risk. On one hand, a surge in e-commerce, especially with the groundwork laid by stimulative policies like the PBOC's measures, can really drive retail sales through the roof.
Yeah, it's like setting the stage for a grand holiday parade. Yet, the looming tariffs and slowing consumer sentiment may throw in a few, unexpected plot twists. It's a bit of a roller coaster ride with, sharp highs and some potential
Right.
dips.
Absolutely. And speaking of twists, it's crucial to keep an eye on those PMI values. They essentially serve as a heartbeat for economic activity. India's over 57 shows strength, while Japan's slightly sub 50 alert us to some potential fragility.
Totally. It's like reading a mood ring for the global economy. And while each country has its rhythm, the collective narrative is that this festive season, despite tariffs, is full of potential if you find the right plays.
Yep, indeed. Summing up, the analysis suggests that while Pinduoduo and C Limited each have their distinct strengths and risks, both are positioned to potentially shine during the festive rush, especially for those willing to ride through tariff headwinds and economic fluctuations.
Exactly. And the nuanced fundamentals and technical ratings support that notion. It's like mixing a cocktail. Bits of stable fundamentals with a dash of technical momentum, stirred with macro dynamics.
Yeah. Before we wrap up, let's just quickly remind everyone about the key dates. Tariffs on November 1st for Chinese imports, and those specific softwood and furniture tariffs on October 14th, which are critical to factor into your strategies this season.
Absolutely. And don't forget that next, folks, we're teasing the PMI Power Play on November 5th, which will dive even deeper into these macroeconomic signals. It's like, building anticipation for the next big move.
Yes, exactly. Right. So as we sign off episode 2, remember, trade smart, keep an eye on festive trends, and don't let those tariff pressures catch you off guard.
Yeah, thanks for joining us on this lively ride through the festive cycles in retail, macro dynamics, and our hot picks. It's been an electrifying exchange of ideas, kind of like a brisk ocean breeze on a sunny day.
Absolutely. And to our listeners out there, be sure to like, subscribe, and share this roundup of seasonal plays. Next time, we'll get into the nitty-gritty with our PMI Power Play. Until then, trade smart, stay vigilant, and keep riding those market waves.
Episode 2 is a wrap. Thanks again for tuning in, and we'll catch you on the flip side. Enjoy the festive season and, keep that momentum alive.
Yes, indeed. Signing off with the upbeat vibes and a note to always plan ahead, even if it means sometimes borrowing a vacation vibe from your colleague. See you next time.